Hello and welcome to another edition of Stockwatch. So Netflix are back in their headlines after yesterday releasing their earnings report for Q4 2020. After the closing bell, they blew expectations away for paid subscriber growth number. However, earnings per share were missed. So to sum up the highlights of its performance, basically the revenue was slightly higher at 6.64 billion. Global paid subscriber numbers added were 8.5 million versus just over 6 million that was expected. However, as said, the earnings per share was missed at $1.19 versus 136. So Netflix stock in the recent months has been a victim of its own success. The company was once the biggest beneficiaries of the lockdowns and closures of the entertainment venues caused by the pandemic. But in the first 9 months of 2020, the streaming service added an incredible 28.1 million paid subscribers, outpacing 27 million that it had in 2019. But for that dramatic increase in new users early in the year meant slower growth in Q3, and that quarter in particular only added 2.2 million subscribers compared to the 3.3 analysts. So it was quite a bad detrimental Q3, but obviously Q4 has picked up, and in between that Q3 earnings report, Netflix stock fell by 4.5%. So there was quite a detrimental downturn in the stock price for investors. There was a bit of a sell-off in anticipation, because obviously when Q2 rolled around, when the pandemic first hit, there was an obvious increase in people obviously staying at home, subscribing more, watching more television, watching more online programs. So Netflix was obviously quite a big contender, but obviously Q3, as just mentioned, was a victim of his own success. But of course, Netflix now has a whole new route of competition going on, such as HBO Max, Disney and Amazon Prime, to name just a few. So it's going to be interesting to see what's going to happen going into 2021, and if Netflix can keep up the pace with all these other online streaming giants obviously looking to get into the market. And since the banking earnings are coming out, I just wanted to touch on Goldman Sachs as well. In yesterday's Stockwatch, I looked at some other banks' earnings report, and obviously they did very well. Citigroup's was a little bit mixed, but other ones such as Bank of America and other banks in the earnings season are doing quite well, and JP Morgan Chase I touched upon yesterday as well. So Goldman Sachs in particular have reported a higher than earnings per share for the fourth quarter. The investment bank reported earnings per share of just over $12 compared with last year's $4.69. So, and they obviously reported more revenues, and this was roughly about $11.7 trillion, and net earnings for the fourth quarter were $4.5 billion. So something to really look at. The banks are looking really well at the moment. I just want to touch on Netflix first of all, and we can see that at the moment the pre-market levels are looking to do a triple top, going up to the mid $560 range. So I just want to highlight this level here. So we've had from the middle of last year, well, this the third quarter, let's say, where we saw more of an increase after the detrimental downturn. This was picking up the pace, and then we had another top, and now we're looking again when the market opens later today that we're going to have a triple top coming up as well. We saw a little bit of a bearish divergence, which was, well, brought prices down a little bit, that we saw this slight detrimental downturn in prices. But now, as you can see, since prices are engulfed in the Ichimoku cloud, there was a strong temptation that prices were going to start falling lower, probably going into this sideways pattern that we've seen in the last few months. But now we're looking to see prices pick up and see if it can hold steady. If it can beat this estimate here, then there's no reason why it can't obviously go any higher than it has done in recent months. So looking to see what the potentials are going forward, but just keeping an eye on any divergences and any kind of conflict to bring prices lower as well. As I said, we're hovering at the lower end of the Ichimoku cloud. There are the pre-market estimates are saying that it's going to jump. So once it does jump, are we going to see it start collapsing again to follow this ranging pattern that we've seen over the last few months. We'll have to wait and see. And just a quick look on Goldman Sachs. As I said, JP Morgan and Citigroup yesterday was something I was looking into. The last time I looked at Goldman Sachs a few weeks ago, I was looking at these levels of breakout here, and as you can see, it's broken out. Prices did go down on the news that Goldman Sachs had a good they didn't get the earnings per share that they wanted to, but it had good revenues. So there was a bit of a mixed data there. So we'll just have to wait and see if prices start waning and coming down to recent levels. So I'll be looking roughly about the $250 mark if it starts to push further down. But first I'll be looking to see if it can hold on to the $300 mark, which is quite a nice psychological level there as well. So that's all from the Stock Watch today. Thank you very much for joining me. If you have any comments, as usual, please feel free to add them to the post, and I'll get back to you as soon as possible. Have a great trading day ahead, and bye for now.